A simple setup I find here on the New Zealand USD where I'm looking to sell this pair going into the New York session. First of all, if we go down to the daily time frame, what we'll notice and observe on the daily time frame is that we've been on a bearish momentum since April of this year. And this can be visually represented on the chart with the bearish trend line that I've identified here with the red line you find here on the chart. As you can see, price has continued to respect that trend line since the beginning of April, and this has gone into the middle of April where we saw that huge expansion that happened and price finally found bottom at 0.62150. So from this area of the market, we don't know what is going to happen at this point in time. The way the situation has began, the way the situation began in May, that is sometime last week, we saw this kind of pattern that happened, and we never can tell if price will probably be going further up, or we will be, or probably this will be a false breakout. That is, this area will be a false breakout that will send price crashing to the downside, thereby respecting that bearish trend line. So this scenario on the daily time frame cannot actually give us a true picture of what our expectations will be going into the New York session. So to make things more clear, I will scale down to a much lower time frame, let's say the 2 hours time frame for instance, and at this point I saw a setup to play around with. The first thing first we will notice on the 2 hours time frame is that since last week, we saw that the New Zealand has been increasing in price against the USD as we continue to see lower highs and we continue to see higher highs and higher lows at this point, which later transform into what look more like a bullish trend line. So with these two information gathered, that is, we have this trend line gathered here, this trend line, this bullish trend line and the bearish trend line on the daily time frame, we saw how price has moved since last week, and you can see a higher high, higher low, a higher high. So price did not touch that trend line until we saw that new high at this point. However, if we look closely into what's happening since yesterday, as soon as price tested 0.64900, which is also a very strong psychological level, allow me to go down to, let's say, 45 minutes time frame to see what has been happening so far. So since price touched 0.69400, be, even prior to price touching that 69400, we saw that price has been respecting this line, this area, 0.64500 area. We saw a high, a rejection, then price touched 0.64900 area, after which we saw another rejection of that line. Then price went up a little bit higher, giving us a new lower high, which is a sign that probably we will be going downtrend. Then we saw this move that broke that key level at 0.64500 during late last night, after which we saw a retest of that key level, which also shares a confluence with the bearish trend line that is identified around this area, after which we saw that bearish engulfing candle that took the market by storm. And what we have right now is price coming back into what looks like uh, touching that trend line a little bit. And at this point in time, I'm thinking that it is high time we might be going bearish on this one. And why is this so? We remember the skill level at 0.64500 has held price supported since 23rd of May throughout yesterday, not until later part of yesterday it was broken down, and since then price has been finding it difficult to go above that key level, which also shares a confluence with that trend line that we identify here on the 45 minutes time frame. So what this simply means is that if price cannot break above that key level and also cannot break above that trend line, definitely probably this will be a new trend line that price will continue to respect going forward, um, going into the New York session. So in the meantime, what my sell position is going to be looking like is, allow me to spool it out to what it's going to be looking like going forward. So one thing I had here is I had a pending order right at 0.64299 and the other one at 0.64210, where I'm looking forward to price continuing to the downside, whereby respecting that trend line, and we are using this key level as our guide going into the New York session. So with this information, we have a take profit target right at 0.63200. And why is that so? The reason why I have placed my take profit target at 0.63200 is basically because if we look left, we can see that we have a demand structure right around this area that price has respected in the form of a bullish momentum in the past. So with that in mind, I want to put that area as an area where our take profit target will be for the meantime, which falls at exactly 110 pips approximately. So going into the New York session, what we want to be looking forward to is the bearish momentum. And to guide our action going to the New York session, we want to be using the key level at 0.64500. We want to be using this bearish trend line. And if we at one point in time see price come down and reject that bearish trend line, it might be another it might welcome another opportunity to add one more trade to this position. So with our stop loss right above that key level at around 30 pips thereabouts, it sits at around, so we'll be looking forward to that move. So on this note, let's see how price action reacts as time goes by. Please note, the regular updates will be shared in the comment section of my TradingView account for reference purposes as time goes by. Thank you for watching and best of luck. Cheers.